What if I told you that a top investment strategist just predicted something absolutely wild about this year's market? Something that could either make you very wealthy or leave you holding the bag. Stay with me, because what I'm about to reveal will completely change how you think about investing in 2026. Picture this. You're riding a roller coaster that drops 20%, then rockets up 40% from the bottom. That's exactly what happened to the stock market last year. And here's the kicker. We might be in for an even wilder ride this time around. But here's what most people don't understand about what's coming next. Bob Daw, the Chief Investment Officer at Crossmark Global, just dropped his annual predictions, and his track record speaks volumes. 8 out of 10 predictions correct last year. But this year's forecast has a title that should make every investor pay attention. High-risk bull market. Those 3 words contain a paradox that could define your financial future. Think about it. How can something be both bullish and high risk at the same time? It's like saying the weather is sunny with a chance of tornadoes. But that's exactly where we find ourselves. And understanding this contradiction is crucial for anyone with skin in the game. Let's break down what makes this such a dangerous moment. The market is priced for absolute perfection right now. Price-to-earnings ratios are sitting in the 20s, which means investors are paying premium prices for every dollar of company profits. It's like buying a house at the peak of a bubble. Everything has to go exactly right, or you're in trouble. Here's where it gets interesting. Daw predicts that earnings growth, which everyone is counting on, will actually disappoint this year. The consensus expects 14% growth, but he's calling for closer to 12%. You might think 2 percentage points don't matter, but when the market is priced for perfection, even small misses can trigger massive sell-offs. But wait, there's more to worry about. Inflation isn't going anywhere fast. While the Federal Reserve targets 2%, Daw sees it sticking closer to 3%. Services inflation remains stubborn, and that creates a nightmare scenario for investors. High valuations plus persistent inflation equals potential disaster if the Fed has to get aggressive with interest rates. So why call it a bull market at all? Because despite all these risks, the path of least resistance is still upward. 2 conditions need to stay in place. Earnings estimates must remain robust, and the Federal Reserve must stay accommodative or neutral. If both hold true, this bull market continues climbing that wall of worry. Now, here's where smart money is positioning itself. Instead of chasing the obvious AI darlings, consider overlooked opportunities. Take Qualcomm, trading at just 12 times earnings while diversifying beyond smartphones into higher quality semiconductors and artificial intelligence applications. Sometimes, the best opportunities hide in plain sight. Financial stocks like Charles Schwab present another angle. More clients, growing assets under management, improved technology platforms. These companies are firing on all cylinders with double-digit earnings growth and strong cash flows. At 20 times earnings, there's still room to run. But here's what I find most intriguing about successful investing in uncertain times. Some of the smartest money managers aren't just looking at numbers anymore. They're considering companies that do good for humanity while generating profits. Gilead Sciences, for example, leads in HIV treatment while donating prevention and treatment resources globally. The bottom line? We're entering a year where being right about direction might not be enough. Timing, stock selection, and risk management will separate the winners from the casualties. This high-risk bull market demands respect, preparation, and perhaps most importantly, the wisdom to know when to hold and when to fold. Remember, markets can remain irrational longer than you can stay solvent. Position yourself accordingly, and may the odds be ever in your favor. We encourage you to engage with this content by subscribing to our channel for more insights on these important topics. If you found this video informative, please give it a thumbs up and share it with friends and family who may also benefit from this information. Your support helps us continue to provide valuable content and fosters a community of informed viewers.